Oil is opening in Asia today, trading a little bit lower. It had started out the morning higher, but it would higher on the sense of optimism, it would appear, out of the outlook for China, and then sobering up a little bit with the sort of euphoria over interest rates and the direction of travel of inflation in the US seems to have started to creep back in. Let's actually kick off in Asia this morning with Peter McGuire, CEO of XM Australia. Peter, keen to get your opening thoughts on the announcements by China over the weekend. It seems generally framed by media coverage as surprise, ultimately making a big move to rescue the property market in China. Will it be enough? What are your thoughts?
Well, good morning, Sean. Good morning, everyone. Greetings from Sydney. Yeah, so I think I probably maybe enough, Sean, in the short term. I'd say, let's see where it is by Lunar New Year come February. But over the next month or so, this might be the sort of good news that it needs. We saw that strong sell-off as far as US dollar. We've seen equities bid up, and even the CSI 300's up 0.3 today. Choppy days across Asia. But overall, I think this is going to be a good sign for China. It's what it needs, and they might be putting, those COVID lockdowns behind them, and they move on to a new normal, so to speak.
Peter, I kind of concur what Omar is saying there. My first thought when I saw the Chinese property announcement, using Omar's analogy of the chop your head off sword and it's not, going to happen, that by the scale of the rescue package, is like, oh my God, this property problem is really this big. It's kind of some acknowledgement by China, really for the first time, that the scale of the bailout that's required indicates the scale that this problem is actually quite a large one, like we had all expected.
Well, exactly right, Sean. I mean, you've got 90 million apartments vacant. The property sector, I believe, is worth 62 trillion. So it's an enormous valuation. It's the largest property sector in the world for any country. And how do they bail it out? And what is the time frame? And we all understand the hurt across from a lending institutions and the contagion for overseas banks and domestic banks. So yes, it's how that plays out. I'll give it a little bit of air and oxygen till possibly Christmas, but I'm very interested to see where we are by Lunar New Year. I think there's many moving parts to this big scale, and I think the fun's about to start.
Peter, just to follow up on all things China and Asia today, obviously we have Biden's first meeting with Xi. We've heard even your prime minister mention recently that maybe a meeting with the Chinese would be good. What do you take away from these meetings, and the first one obviously with the two most important men in the world, maybe?
Well, it'll happen obviously in the next matter of hours, or I'm just seeing here on Bloomberg, Biden looks set to guardrails on US-China ties in Xi meeting. So, yeah, let's see what's discussed, understand the predicament as far as supply chains and the ongoing growth from China and what's going to be expected across many differing industries, from services, naturally the US economy, and what's happening with China's situation and, demand. So, yeah, I'm sitting here inhaling and just seeing how it all falls, Sean. I'm not expecting any surprises, but I won't be surprised.
Peter, the other story that's sort of bouncing around over the last few days that has kind of where everybody seemed to be on the same page, i.e. Fed rate trajectory, now after the inflation figure of last week, which obviously Omar referenced in his earlier comment, there's kind of been a disconnect. The market's read it, though, the world is back to the party. In essence, the Fed seems to have to try and pull it back a bit. What's your read coming into the beginning of this week now, with where the Fed and the sort of monetary policy globally is vis-a-vis the direction of travel?
Well, I think, Sean, you've got to look at what's happening this week as far as reads. We've got China CPI stats, for Japan out Friday. You've got UK inflation tipped to hit 11% this week. So we've got, and China and Japan numbers this week, US retail sales. So all of that, and there's a lot of big points. Now, as Omar said, it's eased below 8%. The US dollar's tumbled, stocks are up, but the the mood on the street is still 50 basis points, and maybe the Fed's going to be a little bit less aggressive with those big hits of 75, and they may tail it back. But we'll just have to see where December's read is and what happens over the next matter of weeks as far as Eurozone and many other countries reporting their CPI. So if energy prices creep back up and they breach that 100, then as far as the cost and inflation, it's going to ratchet it back up, and that seems to be everyone's nightmare.
Let's get the survey question before. I want to get the panel's view as a last comment on whether we are in the Ukraine endgame and what that could mean. But the question, the polling question today is, will China's sweeping rescue package of its property sector remove the drag it has on GDP growth, on China's GDP growth? Is it sufficient? Will this be the silver bullet to take care of this very large problem and allow China to move forward? Yes or no? I haven't put a sort of maybe kind of will a little bit, but just in the yes or no zone. Peter, there's increasing noises that we're in some kind of maybe whether it's wishful thinking or not. Let's be wishful thinking as we come to the end of the year, that the Russian war in Ukraine is entering some kind of end game. And with it, the market impact. We do know that, or at least the military analysts seem to indicate that even if we're not in the end game, with winter coming, that's quite severe in that part of the world, it tends to lock everything down into a frozen place for at least a few months. But just taking the view of the end game or the big pause for winter, what does that mean? What could it mean for markets in general?
Well, you would think, Sean, if that's the case, then that takes the heat out of it, and then that takes a different perspective and sentiment. And that would mean traditionally you'd probably see a little bit of a rally to the upside for equities. As far as US dollar, well, we've just got to wait and see how that rolls. I mean, we've seen a 10%, nearly a 10% move, Sean, or 9% move in the last 7 weeks. So it's dramatic. And having a look at, we're in currency wars at the moment. You've got 139 for the yen only a matter of a week or two ago, and I was telling you it was a 149. So everything is moving dramatically. So let's see where it rolls. If it does, if your synopsis or overview does materialize, then yes, I think that's going to be positive for markets. But we've just got to wait and see how that all rolls by probably December.
Peter McGuire, as always, awesome to have you this afternoon in Australia. Omar Najia, as always, giving it us all here in Dubai, and Kate Durian also in Dubai. So we'll have the Dubai gathering as we see more people coming in for the season. So thank you all. Every morning, 10:30 UAE time. Oil prices on Brent trading a little bit down this morning. Thank you.